Welcome back to the channel. It's me, Adam, and you're watching Unlimited Options Investing. And never in a million years did I think I would skip out and going to the beach. And today was a pretty nice day in order to watch the FOMC meeting and watch Jerome Powell talk about inflation, the economy, and interest rates. But yet there I was watching it. And to be quite honest, it was pretty interesting in the sense that it was functional. It was the real world. Our money is interested in what he has to say regarding the macroeconomics of the world. The S&P 500 and the NASDAQ were both up very nicely for most of the day, and then once Jerome Powell started speaking, it just went downhill from there. And this makes complete sense. If you had shown me this chart yesterday, I would have been like, you know what, that makes sense. If that happens, I wouldn't be shocked. I also wouldn't have been surprised if we saw something like this, where we gapped down and we were low for most of the day, and then went up based on what he said today. And when it came to JPOW today, he came off saying a lot of stuff that was informative, but at the same time, he left a lot unknown. And I don't think the market likes that. He didn't let us know how aggressive they were going to be once they hike, or by how much they're going to hike rates and how often. He didn't really give us specifics and let us know that it would be a month-by-month cases. And that gives me uncertainty that they know exactly what's going to happen either. And I don't know if the market likes that. That's at least the feeling that I got. He kept the same kind of hawkish stance that he's had for the last couple of months as well, saying we're just going to see day by day. We have the tools if necessary. He mentioned the communication between participants in the market and the Fed and how the communication has been really clear. He touched on inflation and how it's been more persistent than he thought it was going to be earlier last year. And he mainly blamed COVID for that, and it makes sense, and the supply shortages, of course, and how he sees it still being an issue well into 2023, actually, the supply chain issue. So, and that inflation is here to stay for the short to medium term. Bitcoin, Ethereum, crypto was all up at the beginning of the day, similar to technology. Then after Jerome Powell spoke, it got sold off. And not to mention, Tesla reported earnings and they had a double beat on their top line and their bottom line. Let's get into all of that. We'll take a look at the charts as well. If this is your first time on the channel, welcome aboard and hit that subscribe button. Here at Unlimited Options Investing, we talk everything from stocks, crypto, options, and ETFs, and we're investing for the long term. As always, smash that like button. We got lots to get into. Let's get started. Okay, Tesla beats on earnings and revenue, says supply chain issues were the main limiting factor. So Tesla beat on the top and bottom lines, and CEO Elon Musk promised to give a product roadmap update. Tesla reported fourth quarter results that came in stronger than expected, but shares fell slightly in extended trading on Wednesday after the automaker warned supply chain issues could persist through 2022. On earnings, they reported $2.52 per share versus the $2.36 per share expected by analysts, and on revenue, they reported $17.72 billion, holy smokes, versus $16.57 billion expected by analysts. Revenue rose 65% year over year in the quarter, while automotive revenue totaled $15.97 billion, up 71%. Energy generation and storage revenue was $688 million, which was down 8% and below the street account consensus of $815.1 million. It was the lowest revenue for that division since the first quarter of 2021. The net income at $2.32 billion was up some 760%. And Tesla said it had a 27.4% gross margin compared with a 26.6% in the previous quarter, especially with these gross margins, because in the long term, in my opinion, that's what the market's really going to be chasing after. And what company has a better moat today than Tesla? Our own factories have been running below capacity for several quarters as supply chain became the main limiting factor, of course, which is likely to continue through 2022. CEO Elon Musk alluded to the supply chain issues in a tweet last November. He wrote, "This year has been a supply chain nightmare and it's not over." The report comes in the midst of the most important tech earnings season in years. The NASDAQ has suffered its worst January since 2008, as many investors have begun to sour on the promise of high growth tech stocks. And another reason we love Tesla, in 2021, Tesla delivered 936,000 vehicles, an 87% increase versus 2020, when it reported its first annual profit on deliveries of just under 500,000 vehicles. Its 2021 deliveries included 308,600 electric vehicles in the fourth quarter. So how did the stock do after hours? Initially, it was down but recovered, and right now hovering at the same price that Tesla closed at today. So firstly, the most important chart in my opinion, I'm taking a look at the QQQ. And for the last maybe 10 trading sessions, we have been on a steep downtrend. We have significant increased volume in the last couple of sessions. And we'll know very shortly in probably the next couple of trading sessions whether we're going to continue selling off or if we're going to push against the downtrend and maybe hover back toward the moving averages. We're still oversold on the RSI for the index. Year to date, we're down 15% on the NASDAQ, and who says we can't go down to 18% 2025? All bets are off, in my opinion, though. I think most of the damage is done. And if we zoom in at the 4-hour time frame, again, we'll have a very good idea in the next couple of sessions if we're going to continue selling off or not, and look at the substantial volume that we had at the end of the day because of the FOMC meeting. If I had to guess, I'm bearish until proven otherwise, until we get some kind of base, and it looks like we could potentially be forming some kind of support around the 340 level with back-to-back wicks. However, with this candle that we have today, this is a pretty bearish candle, erasing the gains we had from Monday, and a lot of selling into the close, especially after we had a really strong and potentially promising morning. And if we look at the FANG index, we could also draw a downtrend like this. We'll know again in the next couple of sessions whether we can break through it or continue selling off. Bitcoin now at $36,500. Right before the Fed meeting, we were just below 3,900, but again, we have a lot of resistance around the 20 EMA on the daily, as well as this trend line, which we're still about a couple weeks away until we get near it. And the thing with Bitcoin, if you zoom out and if we actually take a look at the weekly, we have support at, we know, the $30,000 mark if we get there. And we could actually move this down to maybe about $29,000. So if you break the $29,000 mark, a $20,000 Bitcoin is well on the table. I'm not saying that's going to happen. We can stop anywhere above this. We may be at the bottom right now for all we know. But all I'm saying is if we continue selling off, and sorry, I should zoom up a little bit, we could be confirming a potential longer term double top if we break through this trend, and that could bring a lot of ugliness into the crypto markets, but let's see what happens until then. If we look at Ethereum, we can see a similar kind of story. Maybe you can make a double top if you break through this $1,700 mark. And look up below, the next level of support would probably be around the $1,400 mark. Things getting very, very, very interesting. Taking a look at Tesla, this one reporting today, we're looking at the weekly. It's respecting very nicely this blue trend line. And it actually bounced perfectly off it the other day. And right now still between the 20 and the 50 EMA. Microsoft, which reported yesterday on Tuesday, between the 20 and the 50 EMA. We found support this week around 275. And we're near an area that we found support a couple of times before, around 280. And this stock pretty much in no man's land, well off its 52-week high. But if we zoom out with Microsoft in the past on the weekly, especially during the 2020 crash, when it got below that 50 EMA, it was an awesome buy. Zooming out further and further, we see the same thing. This could be an excellent buy at these levels, but it could fall further if we continue seeing more weakness throughout the broader markets. And when I say broader markets, really Microsoft and Apple make up such a big part of those broader markets. So where Microsoft and Apple go, the markets also go there as well. Speaking of which, Apple, which reports tomorrow on Thursday, right now we're hovering around the 20 EMA on the weekly, well off that 50 EMA. Apple is a stock that tends to go down after they report earnings. That's just a trend that I've noticed since I've been in the market over the last couple of years. That's not to say that they won't blow it out of the water and things will go up, but with the current environment and the sentiment that's been going around, I'm not expecting the price to blow up, so I'm going to be taking a look at how much calls are tomorrow and see if I can sell some against my long position. Another name, Google, similar to Microsoft, near its 50 EMA. Whenever it's been in that area over the long term, especially below it, it's been an excellent buy. So it could continue falling lower toward 2,400, 2,200, but if it does, in my opinion, it's just that much better of a buy. Amazon, this one's tough, falling off its 52-week high, almost $1,000 from its 52-week high in just a couple of months. Absolutely unbelievable. The worst performing FANG stock in the past year and a half. And zooming out, if we do fall below this 2,600, look out below, we could go down to 2,400, even 2,200. At that point, though, I think Amazon is an absolute steal. Personally, I don't think it's going to get to those prices, but you never know in an irrational market. And Meta Platforms below $300. And this one below our trend line that we've had intact since June of 2020. So this could get really scary. If we close below 300 on Friday, we could go a lot lower on Meta Platforms. At that point, I look at the 260 level. And at that point, in my opinion, Facebook or Meta Platforms is an absolute steal. And NVIDIA on the weekly falling from its 52-week high a couple of months ago at 345, 350. Right now about $120 cheaper. Sitting very nicely on that 50 EMA, which it has respected over the last couple of years. And even falling below the 50 during the end of 2018, early 2019. Alright, and that's the end of my video. Thank you very much for watching. As always, I always appreciate every subscriber, every like, every viewer on this channel. Let me know in the comments below what you thought of Fed Chairman Jerome Powell's comments today. What do you think of inflation? Where are we headed in the next 3, 6, 12 months? Let me know in the comments below. And let me know how you have your money working for you. Thanks for watching, and I'll see you in the next video.